right. With us now is Lauren Taylor Wolfe. She's the co-founder and managing partner of Impactive Capital. And if you didn't know, this has become a fairly large hedge fund. Kudos to you.
Thank you very much.
Since 2019 for getting to a significant asset value of over $2.5 billion or so. You introduced an idea at the Robinhood conference last week, which was about aluminum cans, essentially,
yes.
crown cork. And today, WEX. Give our viewers a sense as to your approach, how ESG in some way is part of that, or whether it's not as much a part of it as we might make out.
Yes. So ESG is a part of our approach to the extent it can drive returns, because ESG without returns is simply not sustainable. So in every one of our portfolio companies, we are underwriting high-quality businesses where we have ideas around capital allocation and also environmental, social, or governance ideas that solve a business problem and drive a return. And so in some of the companies you named, we have unique ideas, again, that link ESG to returns, because as you opened, we've seen a lot of pushback into the blanket statement of ESG. Environmental, social, and governance considerations have always been included in evaluations of a business's risks, and our belief is that it can be drivers of a business's returns.
Right. So, what's the conversation like that when you go into one of these companies and you identify perhaps something they could be doing better in terms of ESG, pushing some levers, or so to speak, or pulling levers. I guess you pull levers and push buttons. That would actually address perhaps a societal concern, but at the same time actually do something.
Yeah, so a lot of these ideas that we're coming to the table with are not necessarily addressing societal concern. We ask companies to look inward. We're trying to address the business's concern or business challenges. And we have found over the past 3 years that it's actually the ESG ideas that are most easy to approach, right? Companies and boards really want to understand what matters to me. You have the passive guys like BlackRock, State Street, Vanguard that own 20-30% of every public company in our small and mid-cap market space. And they come to they say you have these 20 things to do that will check the box on ESG. Our view is, forget about the noise, focus internally. What matters to your business, what will address a problem, and how can we link it to long-term profitability and returns? And that resonates with management teams and boards, and that's why we can work behind the scenes collaboratively.
What do you make of this backlash, if I could call it that, amongst at least some Republican state treasurers? I mentioned it when I introduced you. I had this guy from South Carolina a couple of weeks ago. It wasn't as much on the environmental part of it. It was more social and governance, sort of saying BlackRock is woke. They have a woke social agenda. We're going to divest from them. Is that a real threat to some of these who are pushing an ESG approach?
Yeah, I think anytime the pendulum swings one way too far, you're going to get pushback, right? And so I'm not surprised by that. But imagine a state treasurer as a fiduciary, going to their investment advisors and say you should completely ignore environmental or social considerations, which would be like, go invest in PG&E and not consider the risk of gas explosions or fires, which cause the company to go bankrupt. You would have lost your pensioners' money entirely. Similarly, the social side of things really gets to how you're able to attract and retain the stickiest employees and the stickiest customers. So these are business considerations. And for a treasurer or a state attorney general to say you should ignore this entirely, that's just far too extreme. And frankly, I think it'll cause far too much risk to the beneficiaries.
But it has been used, it would seem, to a certain extent by the large asset managers as a marketing tool, hasn't it?
It has.
And are we getting out of that, where people are looking more critically at it, where it actually matters and where it doesn't?
At Impactive, we look at it and, again, only focus on returns. I think you have seen a lot of ESG products, perhaps even in the passive realm, where they simply underperformed. And as I've always said, ESG without returns is not sustainable. So what I think we'll see is a lot of those underperforming products fail and fall by the wayside. And over the next 5-10 years, you'll see the products that actually generate outsized returns continue to grow and appreciate.